It's interesting too, because one of the things we get asked around is, well, look, we can fix the ATO debt, but how do we avoid it in the first place? And
Mm,
to me,
mm,
it's no more complicated than stay on top of your numbers, and that's where your business is so critical with your clients. Because a lot of
mm,
businesses, if you ask them, "How are you going?" Well, they'll go and have a look in the bank account, which is
mm.
about 2% of the real position. And it's like, well,
Yeah, correct.
what do you need to make each month to break even? What are your margins on this?
Yeah,
What is all this? And what's I mean?
correct.
And
Well,
most,
what are your upcoming debt?
yeah,
They don't know. They've got no idea.
all of
Yeah.
that. And often they'll, because we often ask that in sort of hindsight, we go, well, because we don't want to see you again. And then I'll say to them, go back and work with your accountant, work with your bookkeeper, because they're the ones that are at the coalface. They're seeing it even before your accountant's seeing it, particularly if you've got a compliance accountant that's only looking at your stuff every quarter to see what we need to lodge. Your bookkeeper's your lifeblood. That's your best friend in business, because they're the ones that are going to be able to say to you, because you've seen it all, you're literally seeing it on the coalface, and be able to say, hey, you need to look at your prices. You're actually not making money, because by the time we put in this, and this, you're going backwards.
We had a new client come on board. He was a plumber and he'd started a plumbing business and he had a couple of apprentices and he had all this money in his bank account. He had about 40 grand in his bank account and he was brand new. So it was just before he engaged us. He went and made this decision, which was very unfortunate. But he went, oh, I've got like 40 grand in the bank account. I'm going to go and buy myself a ute. But he hadn't lodged his BAS and his BAS was about 35 grand. And then the BAS was done. And we said to him, so there's your BAS, you need to pay it. And he went, well, I don't have money to pay that. And I went, well, why not? And he said, well, I just bought myself a ute. And if he had have actually understood how to forward look and how to understand his own accounts, he certainly wouldn't have got himself into the strife that he did, the poor guy. And it was really sad to see because he said, but I didn't even really need the ute. It's just that I had all this extra money. And I was like, well, I better put it on something. And I went, oh my goodness, you shop for utes the way that I shop for shoes. So
Yeah,
that's
that's it.
probably not the
That's it.
best way to do it in
Don't need
business.
them, but I want them.
So there you go.
Yeah, look, I think and it's funny because I mentioned before around how the ATO debt's been coming down. And one of the things that was part of that was the small business restructuring. And it was brought in and, around, and we all know this, around sort of coming out of COVID to allow businesses and to try and clear that smaller debt and clear out that and allow businesses to have a reset. And I think largely it's achieved that. But I think one of the things, and certainly now the ATO are voting most of them down. So I think they've said you've had your chance now that now we're sort of back to business as usual. And if there's any intercompany loans or direct loans or anything like that, then you don't qualify anymore. I'm not a massive fan of SBRs. I think they've had their role, but they've been overused. And I think there's been a lot of situations where they've been used and maybe the directors didn't fully understand them. And I've got exactly that one at the moment where we had an engineering consulting firm here in New South Wales that got affected by the usual coming out of COVID downturn, cost increases, but also they had quite a number of their clients in the construction industry that went under. And so they lost a lot of money coming out of that. And they did what many businesses did. They did an SBR and they used a really good firm. And it was actually, the SBR was done really well. And they paid about 20 cents in the dollar on a $700,000 ATO debt, which was pretty much all of the debt that they had left. Got it into a payment plan, paid off the SBR. But the problem was prior to it being doing the SBR, two things that happened. One is that they'd been reported to the credit reporting agencies, so it was already out in the market. They had financial problems. And secondly, they had received director penalty notices, which were a combination of lockdown ones, which they couldn't get out of, and normal ones, which had expired. So the directors were on the hook for those, and the SBR didn't get rid of them. Then they did the SBR. As I said, it was done well, but it got advertised with ASIC, and then it was in the market. Their problem, and two things: they missed out on a whole bunch of work that was coming up that they were expecting to get because they were seen as a solvency risk, and they had an event
to pay for it.
Yeah, an event of insolvency. Plus, their staff found out about it, and they lost a number of key staff. So what they did was they pushed cash flow to make the payments under the SBR because they didn't want that to fail, because then they're really in the doo-doo at the expense of their ongoing lodgements. And it's funny, the SBR cleared about $700,000 in debt, and when they came and saw me, they had another $650,000 debt. That was post the SBR. But to make matters worse, not only did they have that debt and the ATO were chasing them for that, there was $450,000 in director penalty notices from the pre-SBR position, which survived and came through. So the directors have now got that. And what was happening with that was the area that the ATO were chasing, and the directors had statements of claim against them personally, suing them for those. And that's one of the things that we're seeing at the moment significantly is that, and it happened when the commissioner came in a couple of years ago, the new commissioner came in, he looked at it and went, and quite sensibly said, we're chasing all these companies, it's taking us all this time, let's just go after the directors and they'll do the job for us. They'll put the companies under that should go under and they'll pay the debt. And it worked. And we're seeing that now. And that's what I was talking about, so much change. Right here, right now, we are back in that space where we are seeing directors coming to us saying, I've got a statement of claim from the ATO for me personally for my director debt, and they haven't touched the company. And they're just doing the same thing again. So, and as I mentioned before, long-term payment plans become increasingly difficult. We're in that situation, but it's putting so much stress on these directors. So, and that was exactly the case here. And it's a case where even a really well done small business restructuring killed the business. As it turns out, it won't. We've now got the business in a long-term arrangement. The directors are in a shorter term because they've got a statement of claim, but it's all sustainable and they're rebuilding the business and moving forward. But they were, 30 seconds to midnight for the whole thing collapsing, even after they'd done a small business restructuring.
Well, that's where you need somebody who really knows what they're talking about. And that's where Tax Assure you guys at Tax Assure do such a good job, because you can't go in with a sledgehammer with the ATO. Sometimes you need a chisel, sometimes you need a little brush, sometimes you need a sledgehammer, sometimes you need a nail. I mean, it just depends on the approach and the business, and there's no one size fits all. And often what happens is accountants are very, very good at what they do, but they are not doing this day and night. It's not their bread and butter, and they just don't know which tool to apply in different circumstances to get the optimal outcome. And you really do need these sort of experiences to understand how to approach it.